Newsfirst, Newsline with Faraz Shaukat Ali on TV1.
Hello, good evening and a warm welcome to Newsline. My guest this evening is the COO of the Advocata Institute, Mr. Dhananath Fernando. Very good evening to Dhananath and welcome again to Newsline.
Good evening, Faraz. Thank you for having me.
It's a great pleasure as always. Now then, Advocata, of course, it's all about the economy and keeping tabs on how we're doing and so on. So, how are we doing? Has Sri Lanka confirmed and come to an arrangement with all our international sovereign bond holders?
Not at the moment for us. So, we are all expecting to come for some level of agreement with the international creditors. As we all know, there are multiple categories of international creditors, mainly the multilateral donors, bilateral creditors, and the private creditors or the private bondholders. So at the moment we have completed the domestic debt restructuring. When it comes to the international or like the dollar debt restructuring, we are yet to move forward with the process, and that's also quite a challenging period for any debt restructuring, especially when we are negotiating with the dollar debt, because of course one side is the geopolitical reasons where China is not a member of the Paris Club, and in the Paris Club we have agreed to provide equal treatment for all our creditors. So not sure how China will see that. Of course they have provided a commitment to the IMF that they will participate in the debt restructuring process. But what we have seen in other countries, sometimes it can delay, like the countries in Zambia and some countries in other parts of the world. So hopefully, we'll hopefully be able to see some progress by end of this year is my expectation.
And how does this augur for Sri Lanka's economy when the IMF have given us a couple of tranches, yes, but how are we doing? How much of their requirements have we met in percentage terms at least?
We have to wait for the IMF press conference for us and basically for their board approval to really understand how we have done it so far, and also if there are revisions in the initial agreements or the deadlines, the benchmarks, we have to wait. But as we all know, Verity Research has done an analysis with 100 indicators. So far we have mainly completed about I think 35%, a lot to be done, and we have failed to do about I think another 17%. The challenge is, of course, the rest of it we have some time, but to complete those with that 4-year time frame, most of the reforms has to start now, because even to complete in after 4 years time, so that challenge is there. So most likely IMF will take, if they have completed the their mission, so then they will take it to the board. If they haven't completed their mission, so then most likely they will take few more weeks and conduct probably online discussions or some other arrangement and finish it, and then go to the board and decide what sort of negotiation that we need to do. But I think all depends on also the external debt restructuring, and this tranche is quite critical, because ultimately it is rather than not the IMF 300 or 330 million dollars which is important, but it is the debt restructuring process that is important for us to move forward.
And would you say that the domestic debt has been completely now watertight done? Is it done and dusted?
From what we hear, it is done and dusted for us. Unless we go for another debt restructuring in another cycle, I think it is pretty much done, and now we can move forward for the dollar debt restructuring or the international creditor restructuring or debt restructuring.
And there is some concern, or coming out of Washington and so on, that the Sri Lankan government must make sure that along with this IMF help, that the Sri Lankan government must ensure that their policies do not cause even greater hardship to the people in terms of their economic and social rights. What do you have to say about that aspect?
That is true for us. Anyway, the Sri Lankan people have gone through a very difficult time. So for them, it is basically there are two sides. One is the prices, the other side is the availability. So at the moment that the electricity and fuel that is available, but of course there are some challenges in the supply chains for some of the industries, some of the medicine and the healthcare sector. There are some bottlenecks on that front. But in terms of prices, we all know the inflation went up to about 70% and more than that. So the price levels are still high. The challenge is the reforms for us, because the other side that the people have to bear the pressure is through taxation. Now already the taxes have increased to a level, I think we cannot go beyond that. So then the other challenge would be, if we again go back on the same route that we were before, then the inflation will come up again, and then that hardship will also added on people's shoulders. So those things I think we have to keep in mind, and that's why the monetary stability plays a pivotal role in this reform process. Otherwise, of course, IMF or whoever can say that people should not, no more pressure should be added on people. But if the monetary system is not stable, it is natural, it's normal that it comes back to people. When the inflation hits like above 10%, regardless of whatever the measures, it is automatically coming down to people. And the challenge would be also, we are facing an election year next year. So generally what happens is, as we all know, during an election time, there's an auctioning of non-existing resources, and that's how basically the central bank steals money from people through inflation. So that's what we have to avoid, to mainly minimize the pressure on people's point of view.
But surely the International Monetary Fund, the IMF, are actually monitoring the situation rather than just giving us, it's not a handout. So surely they're monitoring. What do you think they can do and can say, and how far can they influence the narrative?
So basically for us, they are having this carrot and stick approach. So basically, if we are not adhering to what we have agreed, most likely they will delay the next tranche, or they can only provide a portion of the second tranche. Of course, they are monitoring, or the process will be delayed. The challenge is, if we delay it, again it will affect on the overall economy, on confidence, and there will be a knockdown impact. But that's why we always push. It is IMF can bring some stability, but our game has to be on the growth, because if we only grow the economy, that people will feel some relief by increasing and improving their income levels. So that is where our focus should be, in my view.
What do you say to people who are saying that, in the past, when the previous governments held on to to maintain the exchange rate at whatever it was, the pound was around the 200 mark and so on, and the dollar was much less. What do you say to people who say that now those people who wanted to float the exchange, the rate, and to have it market driven, and now of course it has resulted in the prices going up? How do you explain that away to people who are genuinely concerned about that?
Basically for us, there's this called triangle that we have to balance. Basically, if you want to keep your reserves at a certain level, you cannot control all three. You have reserves, you have interest rate, and you have exchange rate. What happens is, interest rate is based simply the price that you have to pay to buy money. Basically, when you are borrowing money, the interest rates is the price that you pay for it. So if the interest rates are low, you are automatically adding the pressure on dollars, because then when the interest rates are low means that you have easy access for money, so you are borrowing more money and you are importing. So that's why when the interest rates are coming down, your imports are also increasing, rather than it is not because of the removal of the import controls. Of course it has an impact, But if you recall, when we have the strictest import controls, still our exchange rate dropped from 180 to 360. So one side is the exchange rate. So either you have to let it go, or else you have to pump the money from the reserves. Actually, central bank has been doing it to an extent which is not a good indication for the last 3 months. So on a net basis, on June, they have, I think, spent about 12 million US dollars, and I think 14 million in the next month. I think the last month they again spent about net wise about 170 million dollars to stabilize the dollar. But last month it will be also quite confusing, because there was also the domestic debt restructuring took place, and there was some exchange of some other bonds. So it is quite complicated for the last month. But what we can see is basically the central bank, to an extent, to try to keep the exchange rate by diluting their reserves or buying the dollars from the forex market. So if the more the central bank try to intervene, of course they have to let go one of the variables. Either they have to let go of the reserves, or either they have to let go of the interest rates. It's a very difficult balance to strike. But my view is that it is better to control to an extent with the interest rates, because I understand when the interest rates are high, people are finding it difficult to do businesses, borrow money and all that. But the challenge is Sri Lanka is a very small forex market. So just one or two players can have a significant impact on the market. So I would recommend not to dilute the reserves, neither to basically let go of the mainly have a lot of variations on the exchange rate as well, but to balance it off with the interest rate to an extent. But it doesn't mean that our interest rate has to be like 20%, 30%, where none of the businesses can exist.
At what rate what would you say would be the ideal rate for the interest rate?
Ideally for us, it should be determined by the market forces. So at the moment, as we know, the deposit rates have come down, but the lending rates is still high. So ideally it should come down if the markets are working well. But generally, after a debt restructuring, there is quite uncertainty in the market. So that's why they are reluctant to bring down the interest rates. But at the same time, there's also banks are also trying to make quite a lot of profits by keeping the interest rates as well. But the general trend is after debt restructuring, it should come down. But I expect the interest rates to be on single digit. But it all depends on what would be the reform process on one side, because if we can bring more tourism income and if we can bring more export income, then there is a chance that we can bring down the interest rates, and as well as keep the exchange rate at a stable level. But ideally, straightforward answering your question, ideally it has to be somewhere between 10% to 12 to 15% is my range. Ideally it has to be the lesser the better, but it can be lesser the better, but you have to check on the other variables as well. So ideally you have to have a low interest rate, stable exchange rate, and somewhat solid reserves, which is adequate for about 12 months or 8 months is what is better. But we are in a very difficult spot that we cannot control all three variables. We have to let go one of it, or keep a very strike a very difficult balance is our challenge.
And on that note, let's go for a quick break and take a peek at whatever awaits us in the future. In the meantime, we are in conversation with Mr. Dhananath Fernando. We'll be right back after the break.
Newsfirst, Newsline with Faraz Shaukat Ali on TV1.